All right. Let's take a look at a price action here. Initially, when we broke down from this area, we made a low on gold. Now, there was no way that I could see that this could have been a way down other than the fact that, okay, like if we can just do some sort of a, retest, create resistance, and then continue to push down. So we're going to talk about two scenarios. The one scenario is where I took buys, and the second scenario is where the sells played out. Now, I took buys only on the basis of, let's say the 1 hour candle is closing bullish. So maybe this 1 hour candle moving down was maybe creating a lower wick for it to continue pushing up. So if I drop down to the 30-minute time frame, I gave my buys one chance, closed it, and then like, give it another chance, and it actually played out right here on the 15-minute time frame. This was just like playing with price action because in my head, I was thinking that, okay, if the 1 hour candle has created a support, let's say right over here, okay, let's say right over here, and maybe the next candle is just making a lower wick to continue pushing up. That's where I took the buy. It's got about, 15 pips. But the main price action or direction was sells, which is easy to understand now because if we're looking at the 30-minute time frame, we basically created a resistance and then we had this low to retest. Now looking at the 30-minute, this 30-minute candle broke below the low and then we continued to push down, stop loss somewhere right up over here, and then we move down. But on the 15-minute, we can see it clearly where this candle closed with a small body. So whenever you have a candle closing with a small body with a big rejection, especially when it's almost touching the high of the previous candle or breaking the high of the previous candle, that's a telltale sign that maybe there's not going to be a buying opportunity even though the candle is closing bullish. So as we broke below the low of the previous 15-minute candle, we were talking about this in the live stream as well, that as we're breaking below the low, there's a high probability we can continue pushing down. And that's exactly what happened where price continued to push down. And after that, there was another opportunity, I think, for buys at this point, because since we had these clean candles, one, two clean candles moving down, the next candle, so you can see the size of the candles here, right? Big body, high volume, big body, high volume, and then the body became smaller of the bearish candle. This means that maybe the volume going down is decreasing. The next candle closed with a bigger body, bullish candle, which may tell us that okay, maybe the bias is shifting a little bit, and since we have clean candles here to the left hand side, this like 68, 70 pip range. So I'm just looking at it from a hindsight perspective, and this is why trading on hindsight is very important because you learn things which you won't see in the moment that they're happening. So the next candle broke above the high, and you can have a stops below this current candle and anticipate it to continue pushing up. And wow, look at that. We almost filled this entire range. Looking at the 30-minute time frame here as well, we broke above the high and then we continued to push up. So I think there were some lessons to learn. I know some people took buys here and took losses, but my first loss was like, I didn't secure, 20 pips at this point. So I got like, 7 pips out of it. And then the second one, I secured pips before it kind of like, continued to go the opposite way. But I think the winner of this trade in terms of bias was the sells as we broke below the low for an impulse entry for price to continue pushing down. So it's always important to look at price action, how it's forming, how it's moving, where you could have executed, how you missed the trade, make notes, and going over price action after your session is done is actually very, very, very important. Hope this helps. Take care.